Picture this, you're staring at Amazon's quarterly report, numbers and ratios swirling around like a cryptic puzzle. Is this retail giant overpriced, or is there hidden gold beneath the surface? The tension's thick because your portfolio depends on cracking this code. But how do pros slice through the noise and build a crystal-clear financial model that tells the real story? Let's dive into the exact blueprint Paul Pignataro lays out in his latest edition. Before you value a company, you need its skeleton. That's where the core financial statements come alive, showing the company's heartbeat in numbers. In Pignataro's guide, you don't just get dry theory. He walks you step by step through Amazon's three core statements: the income statement, balance sheet, and cash flow statement. When he builds the income statement, it's like unveiling Amazon's profit diary, tracing every dollar from sales to net income in vivid detail. Think of the financial statements as parts of a clock. The income statement signals time passage through profitability, the balance sheet is the clock structure holding assets and debt, and the cash flow statement is the pendulum showing real-time cash movement. Without syncing these, your valuation is just a broken watch. The magic happens when these statements talk together. Pignataro reveals that once you align these sheets correctly, you can spot hidden strengths or skeletons in the closet. Suddenly, what seemed like abstract data turns into a sharp guide for investment decisions, a potent spotlight in murky markets. Numbers alone don't set the price tag. You need sharp valuation methods that pros rely on to peel back layers and pin down what a stock's really worth. Pignataro's Amazon case study dives deep into comparable company analysis, where Amazon's metrics get matched against rivals like Walmart and Target. This side-by-side look spotlights how the market values similar businesses, giving you a practical sanity check price benchmark. Next up, precedent transactions analysis. Imagine buying a house, past sale prices in the neighborhood guide your offer. Similarly, looking at previous merger deals or acquisitions in the retail space helps anchor what Amazon might be worth if it were up for sale tomorrow. Finally, discounted cash flow (DCF) analysis is like peering into the future with a money telescope. Pignataro shows you how to project Amazon's future cash flows and then discount them back to today's dollars. This method is powerful because it's rooted in the company's own expected productivity, not just market chatter. A model isn't just a spreadsheet. It's your secret weapon for real-world decisions, from pricing stock to raising capital, with the kind of confidence only pros have. Pignataro teaches that using your financial model, you can rigorously price Amazon stock, identifying when it's undervalued or overpriced. One striking example shows how a subtle tweak in the discount rate flips the valuation outcome dramatically, reminding you every assumption counts. When companies need cash, issuing debt is like walking a tightrope. The book details how models help evaluate if Amazon can handle more debt without rocking the boat. It's a calculated risk dance. Leverage can boost returns, but too much spells disaster. Finally, raising equity is where ownership stakes get real. Pignataro outlines how models simulate dilution effects, showing you when selling more shares might hurt or help existing investors. This insight transforms you from throwing darts to playing chess in the capital markets. Remember that Amazon report you started with. The puzzle now comes alive as a clear, integrated story built on solid modeling and valuation. Pignataro's approach isn't just about numbers, it's about mastering the language companies speak. So next time you face a financial statement, try building just one statement from scratch, watch how the fog clears and your investing instincts sharpen. Subscribe for more book summaries like this one.